You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day, we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is Wednesday, June 12th, 2019. This is your Options News Rundown. I'm Dan Passarelli. Our first story of the day is from investing.com. It's the top 5 things to know in the market on Wednesday. The first thing to know is there are Hong Kong protests. Police in Hong Kong fired tear gas and rubber bullets at huge crowds protesting against the introduction of a new bill that would allow people to be sent to the mainland China for trial. The erosion of judicial rights is likely to undermine investor confidence in the former UK colonies markets. Protests come at an awkward time for Beijing, only days after the 30th anniversary of the Tiananmen Square massacre and weeks before a summit of world leaders in Tokyo where Presidents Donald Trump and Xi Jinping will be looking to drum up support for their respective visions of world leadership. The Hang Seng fell 1.9%, much more than the 0.8% drop in the benchmark Shanghai Shenzhen CSI 300 index on the mainland. The second thing to know is oil prices skid. Oil prices slid further on revived concerns of a glut in global markets after the U.S. government revised down its forecast for global oil demand this year by 160,000 barrels a day. U.S. crude futures were down 2.8% at 51.80 by 5:45 a.m. Eastern, while international Brent futures were down 2.6% at $60.67. Although the Energy Information Administration also lowered its estimate of U.S. oil production by 140,000 barrels a day, markets still took the news negatively, their fears being further stoked by the 7th rise in U.S. crude stocks in the last 8 weeks, as measured by the American Petroleum Institute. Analysts are expecting official data to show a modest draw in inventories when they're released at 10:30 a.m. Eastern. The third thing to know today is Wall Street is set to open lower and CPI is eyed. Wall Street is set to open lower pre-market as the negative sentiment coming out of oil markets infects equities too. With an interest rate cut by the Federal Reserve now largely priced in for July, bulls will be hoping that May's consumer inflation reading at 8:30 a.m. won't make it harder for the Fed to justify such a step. The fourth thing to know is Musk predicts a record quarter for Tesla. Tesla shares are poised to open over 2% higher after CEO Elon Musk said that the company has a decent shot at a record quarter on every level at the company's annual shareholder meeting. Also, at the meeting, Musk said the company may get into mining in the future to help guarantee supply of rare elements needed by electric vehicles. Tesla's shares have now risen some 15% from their lows in the aftermath of a $2.7 billion capital raising announcement, but they're still down over 30% for 2019 to date. The fifth thing to know is the DOJ sends a warning to tech giants. Facebook, Google, and others can't count on escaping antitrust scrutiny just because they offer services for free, the Department of Justice's antitrust head, Makan Dalram, warned in a speech. He compared today's tech giants directly to Standard Oil in a speech at a conference in Israel, inviting speculation that the government intends to break them up just as it broke up John D. Rockefeller's oil company. He will also take the lead in regulating Apple and Google under a recent division of responsibilities with the Federal Trade Commission, and said that issues such as freedom of speech and data privacy would also be weighed as the authorities look for ways to regulate the sector better. Our second story of the day is also from investing.com. Gold rises after Trump admits holding up the deal with China and CPI is eyed. Gold prices rose on Wednesday as U.S. President Donald Trump admitted to being the current obstacle to a trade deal with China, and investors looked ahead to inflation data. Gold futures for August delivery on the COMEX division of the New York Mercantile Exchange gained $7.55, or 0.6%, to $1,338.75 a troy ounce at 6:38 a.m. Eastern. "It's me right now that's holding up the deal," Trump told reporters at the White House, saying he needed Beijing to agree to 4 or 5 major points without specifying what they were. Trump's remarks dampened risk appetite, pushing global equities lower and benefiting the safe haven precious metal. Expectations that the two leaders will be able to reach a deal at the G20 summit on June 28-29 have been waning. With less than 3 weeks to go, sources told Reuters that little preparation for the one-on-one encounter has been made. While short-term factors have helped the recent rally, gold continues to be supported by heavy central bank buying. The People's Bank of China added another 510 million ounces, or 15.7 tons, to its reserves in May, according to data released earlier this week. It's added 74 tons since November, as the threat for a full-blown trade war has risen. Our final story today is from investing.com. Oil demand growth grinding to its lowest in years as the global economy stalls. World oil markets have undergone a U-turn, switching from supply-side risks like OPEC's production cuts or U.S. sanctions against producers Iran and Venezuela, analysts said, to concerns of slowing consumptions amid fears of a global recession. As a result, crude oil prices have turned a 45% price rally in the first 4 months of the year into a slump of more than 15% since late April. U.S. investment bank Goldman Sachs said on Wednesday that weakening economic growth and lower oil demand expectations were the highest driver of the move lower over the past month in crude oil prices. And with the outlook dim amid trade disputes, especially the one that has led to an expanding exchange of tariffs between China and the United States, analysts have revised down their oil demand growth forecasts. The chairman of the energy consultancy FGE said the demand slowdown came amid a general fear of an economic downturn, and warning that if the U.S.-China trade dispute continues, real signs of economic recession will be seen. And that, ladies and gentlemen, is news you can use for today, Wednesday, June 12, 2019. Your Options News Rundown. I'm Dan Passarelli, trade smart, and have a great day.
The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.